Well, I think I actually have some good news for everybody. I think the era of pushy salespeople is starting to come to an end. Not over yet, but we're starting to see the light at the end of the tunnel. And as a salesperson myself, I could say that being a pushy salesperson has never been my style because, admittedly, the way that I like to sell things is by showing the value that I provide to you as a salesperson or what my products or services can do for you, and then just make your own decision. If you want to buy, great. If you don't, no harm, no foul. Now, the company we're taking a look at today is one of those companies that is starting to eliminate the pushy salesperson, and that's Opendoor. And they're able to do this through their Ibuyer Program, which is what we're going to talk about today, as well as their stock. So let's go ahead and play the intro and get this show on the road. Hey everyone, and thanks for joining me today. My name's Matt, and before we get started here, I just need to say, not advice, don't take this as advice. If you need advice, speak to a financial advisor, but do not make any investment decisions based solely on what I say here, because as always, this is just for your entertainment purposes only. So again, not advice. Also, remember to, if you like this video, 5-cent donation for charity and a 10-cent donation. If you haven't subscribed already, go ahead and subscribe. That'll donate 10 cents. We broke $10, which I am very excited about. And honestly, that's what gets me so excited for doing these videos, is updating that sheet before I film this, just to see how far we've made it, because it's very encouraging to see the amount that hopefully we'll be able to donate once this year is over. So as I mentioned in the intro, the company that we're talking about today is Opendoor. Now, Opendoor recently went public through a SPAC, and the SPAC actually just finished with the whole merger process. The merger did take place through the assistance with Chamath again, so this is the second week in a row that he's been mentioned on my channel, and I want to be clear, I'm not doing this stock because when you mention somebody like him, the videos tend to do a little bit better. I acknowledge that, but the reason why I'm talking about Opendoor is because this is an opportunity that I am very excited about, which obviously we'll cover later. So if you're not familiar with Opendoor, they started in 2014 and they're an Ibuyer program. If you're not familiar with what an Ibuyer program is, the best way I can describe it is by an example. So let's say you want to sell your house, but you don't feel like dealing with the hassles that come with selling your house, whether that be the repainting of the walls, having people going through your house multiple times throughout the day, where you have to pick up what you're doing and leave the house while they tour it. You don't feel like dealing with negotiations once you're already under contract, or having people back out of a contract. Or maybe you just need to sell your house quickly because of whatever curveball life threw your way. An iBuyer is a solution to that, because what they do is they virtually tour your house and they say, based on what we're seeing here, here's your offer. And they essentially just give you a cash offer so you can sell right away and move on with your life. It's a very convenient solution and something that is growing drastically in our real estate world. I saw a number from 2019, so obviously an outdated number, but it said from 2014 to 2019, Opendoor has sold over 50,000 houses, which is a ton of houses to sell in 5 years. That's obviously it's 10,000 houses a year, which is crazy. Now, I don't really have a number to compare it to, but again, I'm a real estate agent, so just take my word for it. That is a ton of transactions to complete. It's also worth noting that Opendoor is not the only player in this space. There are other companies out there doing something similar, like Zillow and Redfin, and funny enough, those are the companies that we'll be comparing the numbers to this week. So let me go ahead and get these numbers pulled up so we can take the comparison between these companies. Now, you will notice right off the bat, these numbers are a little short and to the point this week, and we are using a different metric. We're going to do the enterprise value to sales instead of price to earnings. Reason being is because, to my knowledge, none of these companies are profitable or have a positive PE ratio yet. So, we have to look at other measurements for this one. So, enterprise value to sales, or EV to sales, if you're not familiar, is a very similar calculation or measurement as price to sales. But the difference is that EV to sales actually takes into consideration debt as well. So, some view it as a little bit more accurate of a measurement than price to sales, but take all of that with a grain of salt. That's just for your information. I should note that when you're looking at an EV to sales, similarly to a lot of other measurements out there, we do want to see that number relatively low. But if it is too low, then it's worth noting that that could be an indication that their sales are stale or they're just not growing the way that they should be. So usually for these numbers, I like to see it within a 2 to 5% range as a company that has or could be viewed as undervalued. As we could see, Opendoor slightly higher than that 5%, but that is quite all right with me because 5.29, nothing that I'm going to sweat over, and I'm totally comfortable with putting a company that has an EV to sales ratio of 5.29 into my portfolio. Zillow and Redfin, they are still a little bit lower than maybe what we'd see compared to some other companies or other industries, but they are double what we have for Opendoor here. So if you're viewing it based on this metric, those stocks do look overvalued, relatively speaking, towards Opendoor. Now, I will say the statistic that gets me most excited for this company is the revenue growth year over year, because 157.91% is absolutely incredible to see, especially when we look at the competition. Zillow at 61.48 and Redfin at 30.42. The numbers speak for themselves there. Obviously, Opendoor is doing a great job growing their revenue, and that also translates over to the Ebitda growth, where we see they have a 46.11%, where the other two are negative in their Ebitda growth. Now, for Zillow, I can say that they are doing a lot for growing their business. I think they're adding brokerage. Their platform has gotten much more accurate with more up-to-date information and utilizes more info from the MLS. So it's kind of justifiable to see their Ebitda growth being negative right now, but at the end of the day, it's not positive, and Opendoor is a growing business as well, still having that positive Ebitda growth though, which is very encouraging for me, as always, as the investor. And Redfin, do we have to hit on that one really? Negative 84.64%, that's just atrocious. Now, these companies all have a really good current ratio, but I do want to mention that the current ratio doesn't carry as much weight in this industry as it does in some other ones. Reason being is because as an iBuyer service, you obviously need to have a lot of cash on hand to be able to purchase these homes through the service that you're offering. So when we look at the cash on hand to their debt levels, I don't necessarily believe that it's a fair comparison because, again, they need cash. It's kind of similar to how we don't use a cash flow analysis for banks because their business is cash flow. That might be a little deep in the weeds, but take that with a grain of salt here. These are all very impressive nonetheless, but we should be expecting for these to have a higher current ratio, again, because this is a cash-rich business. So let's talk here about what I like and maybe what I don't like or what could be a threat here for Opendoor. And I'll actually start off with the threat, because the threat is pretty simple, and it is Zillow. I will apologize in advance if my exposure changes while I explain this too, because sun's coming out and I feel it getting brighter in my room, so sorry if it gets a little overexposed. But reason why I say Zillow could be the biggest threat to this company is because Zillow is starting to run the real estate world. And that's because a lot of people utilize Zillow probably more than some other services to look at houses or look for houses. And with the integration with the MLS, I could say, again, as a real estate agent, sometimes Zillow has more listings than what we see on the MLS because it also includes for sale by owners. With that also, Zillow has taken dramatic steps to update their information to be more accurate. So I see this being a threat to Opendoor simply through the fact that if you see a house on Zillow that you want to buy, so let's take this from the buyer side, and you're like, hey, I want to buy this house, when can I see it? All you have to do is hit a button, and Zillow can just send out one of their agents once they have their own brokerage to go show that house to you and potentially form an agency relationship. We're not going to talk about real estate stuff here because that's not what this video is for. But ultimately, without having the search engine that Zillow has for Opendoor, that could hurt the business. So that might be something that they integrate in the future for their business. Now, with that said, Zillow already does something similar with their Premier Agent. Again, we're not really going to get into that because this isn't a video on Zillow, but I do see Zillow taking more ownership of this industry or having a larger market share than what the competitors are able to grab through their systems that they've already have in place. But for the opportunities here, I think Opendoor does a great job with listing houses. Now, I will say when you're selling your house, expect to not get as much as you would through a traditional real estate agent. Now, I'm not just saying that because I am an agent, that's just a fact. Because they do make this process easy, look at it as a convenience fee. They're going to take away a little bit more than a traditional agent would because, well, first off, they ding you on every damage on your house, and they use their comps for that, not yours. So, a hole in the wall could cost $300 if you're using their comps. Also, I saw that they charge no more than 14% for a real estate transaction when you sell through a traditional agent. After paying their commissions, assuming you're doing like a 6% commission, then you pay like all the closing fees and all that good stuff, maybe you're looking at most 10%, which is still expensive, don't get me wrong, but it's going to be a lot cheaper than what you'll see through Opendoor. So actually, that's something that I can also see hurting their business. But again, you're paying for that convenience, and I think that a lot of times that's a fee people will very willingly pay over, especially during times like right now, where it's not necessarily the most ideal time to have what could be 100 plus people a week walking through your house because you don't know where they've been or how sick they are. And Opendoor eliminates that threat of somebody that's sick walking through your house. And I think that's going to be more and more popular in the future, maybe as we're starting to be more and more aware of sanitation factors. Also, circling back to the pushy salesperson, again, if you're selling your house, you don't really want to have to sit through 50 listing presentations to find the one agent and then have it take sometimes 60, 90 days to sell your house. A lot of people, I'm sure, would again pay that extra fee to get it all said and done in sub 30 days, which is something that is very enticing to a lot of sellers and part of the reason why this company is gaining so much traction. Now, when it comes to their buyers, they do have some opportunities there. Ultimately, though, I think that the selling side of this is going to be the huge part of their business because the buy side is a little bit more personal. A lot of people, when you're buying a house, you do want to see it, you do want to walk through it, and you do want to work with somebody who lives in the area, is a little bit more knowledgeable, all of that good stuff. So I think that their real opportunity here is going to come from the sell side. Now, admittedly, I can say that this does hurt the business for real estate agents, but I will clarify that and say not drastically, because I wouldn't be in the process, myself and two others, of starting a real estate business if we did think this was going to be detrimental towards our success. Now, we work with investors, which is a totally different ballgame, but it's worth noting that this isn't going to cripple the real estate industry as we see it now, but it's definitely going to make a lot of agents have to pivot their strategies, and I think buyers agencies will be more and more popular for your local firms like Keller Williams, Helen Adams, Remax, all of those companies. But overall, I think this company has a lot of growth potential, and that's why I'm going to add it to the portfolio. Clearly, me and Chamath are on the same page with this one, because I do once again believe that this company has the potential to be a 10x company. So I'll get the portfolio pulled up, be right back with you so we can take a look at how we're doing so far. So I bought 175 shares of this company at $34.09 a share. So right now it's giving us a gain of around $165, which is really good to see. Obviously, I do expect some volatility as the days go on. Usually first thing in the morning, we see those pops. So great to see the gain nonetheless. I'm never going to complain about that. But this is a company that I think could provide a lot of growth to this portfolio, hopefully like the way that we're seeing with Etsy. So who knows, time will tell, but this is another company I'm very excited to add to the portfolio. Now, in some bad news, IPOE, or SoFi, not doing that great for us right now. It's at 272.25 negative, so not something I'm totally thrilled about. Admittedly, I also bought that one in my own portfolio, and it's not doing well there either, so one we're just going to have to ride out for the long haul. Obviously, we've seen a lot of companies go down before, but as we just kind of wait, hold, then most of the time they start to rebound. Not as sure about that with Fubo, but we'll have to see. As we can see, Fubo is still down negative $700, give or take. But some other highlights that we could see here. So Etsy has taken the lead over ChargePoint, if you're keeping track of that. Has almost around an $800 difference now. So Etsy is on a sprint to that first place. I don't really know how to word that one, but Etsy's doing very well, and admittedly a little bit to my surprise because we did buy that stock at what I felt was a little expensive of a price. Comcast now is positive for us though, up $141, so that one is definitely headed in the right direction. BlackBerry, a little bit of a rebound here at $2,287, so good to see, obviously up from last week, but still down from 2 weeks ago. But overall, I think this is the highest number this portfolio has been at the $18,000 gains, almost to the penny, 1 penny off. But I'm happy to see that because, of course, I'm always happy to see his portfolio grow, but it's always even more exciting when we see it reach new highs. So I'm grateful for that. Overall portfolio makes me happy, so nothing really more to say there either. So hope you enjoyed this video and I hope you learned something about Opendoor. Again, this is a stock I'm very excited about, but that's not advice, so you don't need to worry about if you're going to add to the portfolio or not. As always though, if you like this video, it's still a 5-cent donation. Subscribe, it's a 10-cent donation. And I'm very appreciative to all of you who have taken the time to watch my videos, like, comment, subscribe, because it means a lot to me. All the positive feedback just gets me very excited for continuing to make these videos. I know I don't have the biggest channel out there, maybe not the best channel out there, but we are growing, and I just very much appreciate all of you for sticking with me and for all the support. So with all that said, eventually we'll update this. I know it still looks like a mess, but we'll figure that out later. Thank you so much for taking the time out of your day. Thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and we'll see you next time.